Welcome to the Daily Brief. This is being prepared Tuesday, September 20th, where I'll go over the highlights of what happened in Tuesday's session and then see how things look for Wednesday, September 21st. And it was a negative day. I had planned, kind of hoped more than anything, that maybe this would be a daily brief video only, but because we had more than a percent decline in the S&P 500, there is a full length video that you're more than welcome to check out. So let's go back and talk about what happened. Right at the open, we did have a gap lower. We went down to S1 at 38.59, and then we actually fell below that as well. There was an attempt at a rebound, and we almost got back to the daily pivot, but not quite there at 38.80. As the day went on, prices declined, but did not get down to R2. This is one of those strange days when the pivot levels, they didn't really play into things as much as they usually do. Had we got to R2, it was at 38.18, but we never got there. Going into the close, this is part of the pattern that we're seeing. Late day buying, which took prices back almost to S1. And we still finished down, and it's not that things turned positive, but we're seeing early weakness, late day buying. We ended up being down 1.13%. Volume was just about average to slightly below average. And we're negative with the technicals, with the Fed meeting, inflation, interest rates, growth concerns, Fed speak. That's going to be the fixation, barring some kind of other major event that comes along. So what are some comments that we can make? This is the third time over the last three sessions that we've seen early weakness and late day buying. Now, we didn't turn positive in Tuesday's session, but we are seeing that, and that could be smart money coming in later in the day and starting to buy things. But we've seen that three times now. The S&P, it did fall below Friday's low, but then buyers came in and took us back above that low. That was one of the positive things that we were looking at. There's some concerning inflation data that's coming out of Germany and Japan, and throw the US on that pile too. There's a lot of Fed jitters right now. Are they going to raise interest rates 0.75% or a full percent? The odds, and I addressed this in the full length video, it's over 80% that they are going to raise interest rates 0.75% rather than a full percentage point. But there's people that just freak out about this. In Tuesday's session, all of the sectors did decline. The transports hit a 52-week low. We're starting to see a negative divergence when you look at Dow theory. The Dow itself is not hitting a low, but the transports are. And if you include utilities in Dow theory, that chart's still holding up pretty well. Some of the positive things that I tried to bring out in yesterday's video, those are starting to vanish. There are still some positive things that we can take from Tuesday's session. With pretty much all of the indexes, we held support at the pivot points. And so that can be taken as positive. But as we're dropping, stocks are starting to become oversold. Doesn't mean we can't go more down from here, but we're starting to get extreme negative with some of our readings. The 30 to the 5, the 10 to the 2, and the 10 to the 5, those yield curves remain inverted. Sentiment didn't even budge, but we're still tilting over towards the fearful side. We had housing starts come out, and that was actually a little bit stronger than expected, where the building permits were a little bit weaker than expected. And both of these can be leading indicators of what's happening. Our trend, we have gone slightly above 20 with the ADX. So it's negative because the red line's on top. Our bias is negative with the down day, and the last number of days have been negative. So our momentum is also negative. So what's our outlook? Our technicals are negative now. Some of the improvements that I brought out yesterday, they're starting to go away, other than we're still holding on to some support levels. We have the weekly MBA mortgage applications index. That'll be coming out, followed by existing home sales. And then the biggie is going to be the Fed. And they'll make their announcement at 2 p.m. Eastern. Then they'll start their press conference about 30 minutes later. And the markets will be hanging on every word that Chairperson Powell says. We have the whole list of geopolitical events, but today is pretty much looking like it's going to be the Fed, barring some other kind of action or some event that ends up happening. So our scenarios, we pretty much have to go with the down scenario right now. Technicals, they're negative. Some of the improvements that we're seeing, yeah, some of them are still kind of there, but I had to dig to find those. They're not necessarily obvious. We don't really go with the up scenario now unless you want to get in front of a freight train, because there's just really no justification for prices to go higher right now. Anything can happen, but we're just not seeing that in our charts. We can't even really go with the sideways trend right now because the ADX has gone slightly above 20 and it is negative. So our conclusion then is we're negative across the board. You just kind of have to take it that way right now, but possibly becoming oversold and still holding up with some pivot level support levels. So thank you. Please feel free to tune in to the full length video for more discussion and commentary and analysis, and have a very good day. And I will look at preparing a video after Wednesday's session.